Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 29th of April and we have our regular guest, Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, coming in to us from Singapore. Great to have you on the show as always, Vishnu.
Always good to be here, Brian. It's a great way to start the week as well. Thank you for having me.
Now, Vishnu, for a start, we have regional markets looking past higher for longer US rates. I think that inflation bugbear is still in the minds of investors. Talk us through the expectations around the FOMC meeting this week.
Sure. There are a few things to consider. One is in terms of the order of data that came through, there was a little bit of relief to be found in Friday's data because it showed that March core PCE didn't rise by as much as feared. So markets were fearing that there would be an acceleration there to about 0.5% month on month, is 0.3%, somewhat more subdued, though not totally consoling. So there's a little bit of relief there. But essentially going into the FOMC, markets are expecting that the Fed today will be somewhat less dovish, if not more hawkish, depending on how you want to frame it, than they were in March. The more aggressive participants are even expecting the Fed to give an indication that there would be fewer than 3 rate cuts this year. But to set the record straight, this May meeting has got no revisions to the economic forecast, nor does it have an updated so-called dot plot where the FOMC gives us a consensus of how many rate cuts they expect this year and the next few years out. So we won't have any official numbers. A lot will hinge on the policy statement as well as the press conference. Our sense, though, is it's a very high bar to get another hawkish surprise. In other words, it'll be a very high bar to see US Treasury yields rallying and surging much harder based on the FOMC statement. And here's why. Markets have already pretty much priced in a pullback in the number of rate cuts this year. Basically, rates markets are looking at fewer than 2 cuts. So you could frame it as just looking at 1 cut or, if that, coming to 2 by early next year. So already the expectations which have been priced into yields which are a lot higher now, 2-year yields are close to 5%. 10-year yields are pretty much knocking up on 4.7%, very, very elevated levels. So we think that the bar for a hawkish surprise from what the Fed says is pretty high. If anything, Jerome Powell might say, folks, we are a lot more undecided than we are decidedly hawkish. So that might set markets back and say, look, we don't need to get overly pessimistic and shoot ourselves in the foot or whatever with it. So there is every chance there that we are looking at 2-way volatility, not a 1-way up for yields and the dollar. That said, we want to be very mindful that the dollar is in a pretty robust position between FOMC hawkish surprise. There is also the other side of it where the risk-off sentiments, the uncertainty around geopolitics, and weak China sentiments are keeping the dollar propped up. So it would be unwise to challenge the dollar, although it would be too cavalier to expect the Fed to just turn outright hawkish because, in essence, there is a lot more uncertainty around the outlook than there is unequivocal hawkish signals.
Okay, then Vishnu, in this case, then where does this leave the BOJ and the yen? Because we've just had the yen weakening to 160 against the US dollar, which is the first time since 1990. So what are we looking at from the BOJ now?
So the BOJ is really in a bit of a conundrum because on one hand, I think they are rightly signaling it's premature for policy to get too hawkish too soon. A lot of the things that they've seen are premised on initial and perhaps fragile recoveries. So the return of tourism, the beginning of a pickup in the manufacturing cycle. But we also bear in mind that a lot of the hawkish expectations that have been projected on the BOJ based on strong wage increments are partly a byproduct of a weak yen, because weak yen means exporter earnings turn into a lot more yen when they convert it. They're able to then provide this as increments. But if we get the opposite, where the yen doesn't weaken and instead strengthens as the Fed cuts rates, that pace of wage increments cannot be kept up. So a lot of what's being projected on the BOJ right now is very presumptive, and certainly it's really premised on many conditions being fulfilled. So the BOJ probably is comfortable with where they are on policy, certainly not comfortable with where they are on the yen. That said, they also, I think, are getting uncomfortable waiting for the Fed to cut because we just don't know when that's going to happen. And in between, the pain trades there are really very disruptive for the economy and for exporters. I know tourists are feeling wonderful, so everyone's changing their yen, waiting to go on the Japan trip. In fact, I think as we speak now, some people are on their airline websites trying to book a ticket. These things, for sure, granted. But from a policy and a macro perspective, there is such a thing as too much of a good thing. So too much tourism based on a weak yen isn't what they are gunning for either. I think we need to be careful about intervention risks. The MOF, which is the Ministry of Finance, which does the intervention, at least optically, they are not, in a position of just sitting on their hands. Instead, I think they are looking for the window of opportunity to intervene. That might happen when the dollar weakens. So given what we discussed with the FOMC earlier, if indeed hawkish expectations are too high and they are pulled back, so to speak, selling the rumor, don't be surprised if the if the MOF comes in to intervene just to tell markets, guys, don't get too speculative, and we're not going to reveal exactly when we intervene to keep the uncertainty quotient and the efficacy quotient rather high for markets. So that's what we should expect, where there should be a decoupling between BOJ's monetary policy and the yen. And for us, intervention risks remain high, whereas very emphatic hawkish moves by the BOJ is not compelling. These two are quite different things.
Now, moving on to China, then this morning we've just had some announcements. Chinese markets are up after the government further loosened some restrictions on the property market. What is your take on these latest measures?
I think it's encouraging, but I don't think it's liberating. So this is what we think. A, we've seen Chinese stocks rallying for a while now, and part of it has been based on whispers that the government is going to come out and further loosen and do all of these things. So one of the first risks and a knee-jerk risk that we look out for is where people buy the rumor and sell the fact. Second is we have seen rounds of easing of the property market measures, and they've typically fizzled. The question now is, are the moves emphatic and broad enough to avert a fizzle and to keep the momentum ongoing? And in any case, I think markets will be very, very cautious about finding a bottom. So we shouldn't be surprised there's further destocking first. And then there needs to be confidence to be found before things start picking up. Because even as there are some easing measures through, I don't think there's complete resolution or transparency on how the ongoing cash crunch and the consequent liquidity problems and defaults are going to be resolved. So we don't know all this yet, nor does anyone else. And for that reason, there should be some lingering caution, even as the relief is welcome.
Now, Vishnu, then it's a Monday. Besides the FOMC meeting, which is obviously the big event of the week, what are some of the key data points and market events that we should watch out for this week that could move markets?
That's a really good question, and good that you brought me back here. So it's a Monday. I've had my obligatory dose of pessimism. It's just exactly how anyone should start the week. What else should we look out for? So obviously what we talked about, the FOMC midweek, which is in this region, most people will be on a May Day holiday. So when you come back after the May Day holiday, Thursday morning will be the reckoning where we get to digest what the Fed has done because they do it Wednesday overnight our time. After that, we also have quite key stuff happening over the turn of the month. We've got the US jobs data on Friday. And before that, in between, we need to digest on either side data on ISM manufacturing and ISM services. So basically getting a measure of the US economy's strength, because markets will follow through with what the FOMC has said with incoming data, and that would give rise to volatility in USD yields, perhaps in the dollar, and as an extension, maybe the yen, if the MOF latches on to these things. So these are the main events to look out for. We also have got ECB's GDP, data release. So we get a sense of how the global growth is planning. We'll probably still get a pretty uneven picture. So it's more a lack of being undecided rather than having perfect clarity.
On that note, Vishnu, thank you very much for your insights. Thanks for coming on the show.
My pleasure always. Thanks for having me, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. And this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and trading apps. Thanks for tuning in.